Markets Now is brought to you by Durstack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durstack technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
And welcome to Markets Now. I'm Michelle Rourke with Kevin Duling of KD Investors. Livestock futures all in the red this morning. Wheat actually started higher, but is now lower. And corn and soybeans, which had some pretty good gains overnight, have come off of their session highs. Kevin, let's talk a little bit about this environment that we are in. Obviously, this market is watching what's going on with the Iran conflict. And how do you think we're trading this right now?
Well,
is this an inflationary play?
Oh, absolutely. I think that's the biggest take out of it is the inflation side, and then a lot of uncertainty. We don't know how long this is going to last. We don't know. Iran seems to have attacked a lot of different areas, and with a lot of uncertainty around that and how this proceeds. And so, we saw the hedge funds move out of their short position fairly quickly, and so they're not wanting to be short in this environment. We've seen the dollar spike pretty hard the last 2 days after the conflict started, and so that's been the negative pressure for grains. But going forward, with oil up $8 in 2 days, diesel up 60 cents, we're basically, the inflation chatter is coming back on pretty hard, and that's the key driver today, I think.
So you mentioned the funds who have covered a lot of their short position that they've had for, I think you told me, 4 years in the wheat market. They've covered a lot of their short position in the corn. Do they start moving long here? Are they that fearful of inflation or not?
That's a good question. I'm not 100% sure. I mean, the supply demand chatter is still kind of rough, but I mean, demand's been fantastic across the board. But what the funds do here, I don't know. There's been some other types of funds. We've had the index funds and some of the algorithms starting to move in the longer side, or the momentum group. They're moving to the longer side. So the hedge funds might follow them. That just remains to be seen. We'll know that answer in about 10 days. And if they take the buy side, then look out. We could have a decent move here. So.
And as you said, the headwind here for corn, but especially wheat, is the higher dollar. But we also have kind of run up into some chart resistance. Corn up at that, 450-ish level?
Yeah, that's the hard spot. For one, it got us back into the middle of the range we had prior to the January report. 2, the 200-day moving average is just below 450. And 3, 450 is a nice round number. A lot of people saying if I could just get 450 on the futures again, I'd sell. So you've got that to contend with, and the daily charts confirm we spike above that every day, and then we seem to close below it, and that's the trend so far today. So we'll see where we close, but so we've got some work here on the technical side to get over that. And do we belong over that? Do we not? That's going to depend a little bit on the inflation side and the fund side and all that. So
yeah, for sure. And then where are we running up into resistance in the wheat market? Is it that psychological $6 mark, do you think, or not?
I'm sure there was quite a bit of selling at $6 on the producer side, and it just happened to coincide with about the time the funds ran out of short positions to cover. So you got that going against us, and I mean, the good news is there's still world tenders going on. The Saudis came in and booked a bunch of wheat. We're just coming into the weather season. It's going to fire up here in a couple of weeks, so for most of the northern hemisphere. So that one, at the end of the day, did the funds look at this and do they really want to be short going into this? And they said no. So that to me is pretty encouraging.
For sure. We've been waiting for some sort of a catalyst for a while to get them out of those short positions. Soybeans, let's talk about that separately, because it feels like we are trading a little bit differently there. China, obviously, we were worried about the fact that they were not happy that we went into Iran and that maybe they would pull out of this summit that we have in April. But it sounds like there's meetings going on here yet, even in the next couple of weeks heading into that, huh?
Yeah, this whole situation is pretty amazing to sit back and watch. I mean, we had the Venezuelan situation, which was a key hub for Chinese energy, and now we have Iran, which is a key hub for Chinese energy, and then we have us wanting them to buy our soybeans, and so where do we go with this? How is this going to work out in the long run? And so right now it's somewhat positive because basically because the inflation trade, the oil is taken off, which is helping soybean oil, which is helping the products, which is helping, spur the psychology behind soybeans. But in the background, at the same time, if we're taking out Chinese main energy suppliers, how are they looking at that? How are they looking at us? Boy, big questions there. So it's going to be a little chaotic.
Yeah. So why do you think China has not gotten mad at the United States here and said, we're not going to talk? Seems a little confusing to me.
It is. At the end of the day, though, remember, the American consumer is huge to them. We have to be there for them. And I think that's the answer to that, is they can't, they'd like to live without us, but they can't live without us. I think at the end of the day is what I gather from that. So there's still a little bit of they're still kind of hooked into us that way. So
gotcha. So let's talk technically in the soybeans, because we went up on Monday, made new highs for the move, took out the November highs, and then we could not get back up through those levels. And we've been seeing a lot of buying in the overnight session. And then today, right now, we're not up very much. Is that because the outside markets, like the financial markets, are starting to tank? Is that a fear we need to have, or what's going on?
Not sure how bad the financials will hurt us going ahead. I mean, the stock market's down over 1,000 points this morning, and it's not hurting the soybeans too bad yet. It's technically that's a tough one. I was a little concerned about it yesterday. I was pleased to see the overnight strength. Kind of saddened it weakened some since then, but all the grains have made good moves on the longer term technicals. Have all kind of turned the corner, but I wouldn't be surprised to see a pullback here in soybeans just based on that. I feel like maybe we have to take a week to correct before we can push higher at this point. So.
Yeah. The other thing that we haven't talked about is the impact this is having. You mentioned on energy prices. So diesel prices are up the last couple of days sharply, and fertilizer prices are going up too. This is all going to play into some of these spring planting decisions, isn't it?
Oh man, it couldn't come at a worse time for farmers. I mean, it's going to be brutal for us. Right at the time we could go, the diesel prices up, the fertilizer prices up, the spray prices aren't going to back off. The input story is just rough, and I think the way to handle that is just be really careful. If you get excited about forward contracting, make sure it's a profit. Make sure you're not locking in a loss. I just don't see the logic in that. I know some people do, but for the life of me, I think if you're going to lock something in ahead of term in November beans or December corn or whatever, make sure it's a number that gives you some wiggle room for those input costs, because they're going to be obnoxious. So.
Yeah, absolutely. And are you pricing some of the grain here on these rallies? And should you have some of your orders in the overnight? Because that seems to be when the highs are being hit.
Yes. Yeah, definitely. We put in yes to having orders in. We haven't really hit those yet. I mean, we haven't quite reached a profitable spot in most of those. Corn's right there. I mean, we're a nickel within my target. So we may just pull the trigger depending on how the price action goes today. Soybeans, we got a little ways to go before we can make money on those. Wheat's the same. We got to be up into the mid upper sixes before we can really have a chance to break even. So I'm just not ready to lock in a loss yet ahead of the growing season. So, but yeah, the targets have to be, you got to put the orders in, because this thing moves so fast so far, and especially at night, that you got to have that in there. So.
Gotcha. Let's conclude on cattle, which had a recovery yesterday. We held support and bounced off of it. Not so much today. We've taken out those support areas. This is just spillover from the stock market, or what?
It's spillover from the stock market. Plus the cattle chart just kind of looked like it ran out of gas there. And you got to remember, I mean, back to when the government kind of stepped in to put their thumb on the cattle prices. I mean, that the funds were long at that point, and it kicked them out. And my theory was they're not going to come back into this market in a big way because of that. And so we started running up into those positions again, or up to those highs. And that's where it started to look shaky and like, well, the cash may stay strong, but the futures look, wavy to me. They look like they could back off a ways. And that's so far, that's what we've done. And now you got the stock market down 1,100. So that's not helping it either. So there is some exposure to the downside here on the cattle futures.
I was going to say, how concerned are you about the amount of risk here?
Well, I mean, to me, I really like the put spread. So that, well, you could get about a $30 gap with a put spread that doesn't cost too much, and that's about what I see as the risk. You got another $25 to the downside before it looks good technically again. So, I mean, the cash side just looks great though. It looks strong. We got grilling season coming. I mean, so we're going to see a big divergence here between cash and futures. So,
yeah, and you got futures at a big discount even to last week's lower cash. So hopefully that'll be supportive here then.
yes, I hope so.
Yeah. Okay. Appreciate it as always. Kevin Duling with KD Investors, and that is Markets Now.
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durstack trait technology, featuring 3 powerful modes of action to strike corn rootworm at full force, outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at Durstack.com. Available for the 2027 season.